ETF correlation and option performance analysis.
Wow. Okay. Does this literally say 1 of 10 slides?
I'm, let's see, 1 of 10. Yeah, 1 of 10.
Right. Get your helmet on, Jenny. Okay, when individual stocks IVRs decline and market uncertainty rises, sector ETFs become valuable trading alternatives. Okay, so this study analyzes the performance of correlation between heavily traded sector ETF and their top components and option strategies. I love this. So let's just kind of break down that sentence. When individual stocks, meaning your Apples, your Googles, your things that are individuals, IVRs decline, the ETF sector becomes valuable trading. And I kind of agree with that.
Well, and I know we've been doing a lot of like deep diving into old research as we prepared our presentation for that we're doing at the RMC. And one of the research pieces I found from the past said, and I don't know if you remember this, and it's not in our RMC topic, but we did talk about it. When IVR is super high, trade individual products. When IVR is very low, trade ETFs.
And I bet this is springboarding off something that they've done, which is fantastic. Okay, so good. Number 2.
All right, we first examined the correlations between the 5 most popular sector ETFs. So we've got energy, technology, financial, healthcare, and utilities. So XLE is energy, XLK is technology, XLF is financial, XLV is healthcare, and XLU is utilities. So I was thinking like we'd be looking at other ETFs, just like SPY.
You were thinking triple Q, SPY, things like that.
Yeah,
not any sectors. So if you're taking a look at this, if you're taking a look at technology, and let's just say, your Google or the technology sector goes down, the ETFs or the IVR goes down, then you can take a look at if you want that sector, go into something like that.
Right.
Okay. Next up. So here's the correlation. As of September 4th, which is yesterday, XLF demonstrates a stronger intersector correlation at moderate levels. The remaining 4 sectors maintain minimal positive correlation. So let's take a look. So this is the 3-month correlation between all of them.
Correlation. So you're comparing them. And it says XLF demonstrates a stronger intersector correlation. So
the financials are kind of the financials kind of stay correlated with everything else, and you can see that because it's kind of the green lines are thicker at the middle.
And if you see like a number closer to 0, right? So closer, the higher you get towards 1 or -1, that's a stronger correlation. If you're very close to 0, so like XLK to XLE is 0.03, really no correlation there. Or XLF to XLE, 0.06, really no correlation there. So you can see many of these aren't correlated. So if you're looking for a diversified portfolio, it's okay to be into various of these X's that aren't correlated.
X's. This used to be the super pit. All the X's were in the super pit.
Yeah.
All right. Let's go to the next one.
Over the long term, their correlations strengthen moderately, falling within low to medium ranges, meaning they tend to move in the same direction about less than half of the time. Utilities display weaker relationships with other sectors due to their heightened interest rate sensitivity and frequent use in defensive allocation strategies. So that last one was just looking at a shorter time frame. This is looking at a 120-month correlation.
Okay, so that's good. You can see the correlations pick up a little bit then.
Yeah, like longer term, but recently they haven't been as correlated. But if I'm trying to sell puts and sell strangles, maybe I don't, and I'm not afraid selling strangles in these X's. So let's say I'm selling strangles and I don't want to have two correlated products. I would, maybe sell a strangle in XLU and sell a strangle in XLE, or what? That's probably the least correlated here, XLE, XLU.
Yes. I was just kind of looking at the prices of them, XLE and XLU. So they have like a 20 IV rank. So I know this says when the rank is down on everything else, kind of to look at some of these. But if you're looking at them, these utilities, like I'm trying to think of give me a utility. I can't think of one. I was going to look at the IVR over that. But so nonetheless, that's what they're saying. So you're right. You can kind of take a look. If you don't want to be in an individual product, you can sell strangles in both of these because they're not that heavily correlated, right?
Even XLE, XLV, XLV, XLE, XLU, there's a handful of these you can find that aren't that correlated, and you can still some premium and have some positions on if you can't find things to do in the general market because the VIX is too low everywhere else to be trading individual stocks.
You see this booster down 30? we'll jump back in there. SPOO's down, NASDAQ, everything is red right now. Everything across the board is red, which is crazy. Okay, back on. Next.
Um, and I'll get to this, but just a side note. So it's interesting. So we're doing the morning show, and our show is usually 10 to 11, which is great. We're trading in our own accounts before our show starts. I don't know how Tom and Tony the traders at heart, like, and I know Tom trades during the morning show. And so I guess, like, it's driving me crazy that I haven't been in my own personal account to get in there today.
Well, he trades in his own personal account. So
Yeah,
that's
he does during the show.
so what we're trading a show account. So it's completely different. Like he's already been trading at 8:30. I'm just wondering what they're doing right now at work by 11 in San Francisco because the market,
Right.
I
Well,
wonder.
they're doing their live trades, but you know what? It's only 7:30 there, so it didn't start yet.
Yeah, it didn't start yet. So they're
Oh.
they're hunkered down in the corner, not talking to anybody in their own computers. I'm just kidding. They're probably shaking hands. Okay, the 5 primary holdings within each ETF demonstrate an average cross correlation of 0.27, weak to moderate level, consistent with their parent ETF relationships. The correlation level supports effective diversification when constructing multi-sector portfolios.
Yeah, great. Okay, so then you talked about XLU. Here you can see the 5 primary holdings: NEE, CEG, SO, DUK, VST. When you asked me to come up with
I couldn't have come up with those if you paid me. That's what I'm saying. Give me a utility. I couldn't come up with one of those.
what are the top holdings of XLU? No idea.
Any of the other ones I could have, right? When you're looking at this, XLE, I could have named some energy technologies. I could have named those. XLF, I could have named those. So any of those, and I ask you for the utilities. It's me, of course. Like I never would have said that.
CEG, don't you remember?
So that is interesting that they do have a kind of consistent relationship with these.
Yeah. Well, it says the consistent with their parent ETF relationships, this correlation level. Okay. Yeah, I think that's good. Again, VIX is low. Trade the ETFs instead of the individual companies.
Well, it doesn't say VIX. It says when individual products IVR is low. Go into
AVGO. I wonder how much AVGO is boosting XLK today.
Oh, well, let's see if it's still up. Hold on. We can go to the next one while I'm looking at
But are the other ones falling enough to offset it?
AVGO is only up 10%. It was up almost 20.
Yeah.
Okay, so let's go to the next slide. Oh,
now let's examine the 45 DTE 16 Delta Strangles performance.
It's so funny because I was like, this is the easiest one to read. Let me jump in on that one. Okay. Both ETFs and their constituent holdings exceeded the 68% theoretical success threshold. The success rates were similar across all sectors, ranging from 72 to 84. So this is the 16. So let's go back. That last slide, we don't have to go back, but that last slide was 16 Delta Strangles in all of these. And these are the results, okay? So between the ETF and the stock holdings. So they're pretty consistent.
Yeah, it's similar.
With their number one holding, it's very similar.
It is similar. It's similar,
but everything but healthcare. Oh no, never mind. And utilities. I was going to say the ETF slightly beats its number one constituent. I like using the word constituent.
All right, and the slide 8, please, John. Technology sector results align with historical patterns, showing modestly lower success rates compared to other sectors. This happens because tech stocks have high volatility and have moved mostly upward over the past decade. We next analyze how success rates correlate with option premium relative to underlying asset prices.
Oh, now we're getting into it. All right, next slide. So premiums levels show weak relationship with strategy success. Rates. ETF performance remains stable across sectors and mostly matches or outperforms SPY. Okay. Success rate of the energy versus the stock.
Well, and here we're talking about the premium level. How much premium is in those strangles.
So look at the financials. The financials has a 5.9% premium, and it's got the highest success rate.
So you're getting the most bang for your buck in those options?
In the options, yes. It looks like you are. In the ETF, right?
Right. ETF performance remains stable across sectors, mostly matches or outperforms SPY. But here, in all these scenarios, you've got a high success rate. This is 16 Delta Strangles. So here, what does this tell you? The 16 Delta Strangles have a high success rate. And we saw in the previous slide, it still had a high success rate if you're doing the stocks or doing these ETFs.
It
But
did.
I've seen previous market measures saying you're better off trading individuals. Like if when the market falls and the vol rises, I think if they're testing the opposite, when the market falls and the vol rises, you see much better results on individual products than ETFs.
Right. And I think that the one that we're kind of can mixing up is it was about VIX levels. This is about IVR of individual products of its major constituents. When the IVR of the constituents are down, go into the basket, right?
Yeah.
Let's see.
Okay, good. This was good. Last slide.
This is going to be the takeaways, right? Okay. Correlations between sector ETFs remain low to moderate over long-term periods. We saw that, providing diversification benefits for multi-sector portfolios. And sometimes it's easier if you don't want to jump into like a main person, like a main name, just go to a basket because it will smooth out the deltas.
Premium levels demonstrate minimal correlation with success rates, suggesting that sector selection based on volatility pricing may be less critical than sector fundamentals for Strangle performance.
Okay, that's good. So that right. So you can just if you want to be an AVGO, just jump into, and I'm using that one just because it's topical today. You can go into the technology sector.
Yeah, end it. Bring us home, Liz.
ETF strangle strategies across all sectors and their major holdings exceed theoretical performance expectations comparable to SPY.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.